Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 28th of March. Upward GDP revision keeps dollar supported. Amid a very thin market, the US dollar added to its recent gains on Friday after US GDP for the fourth quarter was revised up to 1.4% quarter over quarter in its final estimate from 1% previously. The main driver behind the revision was better than anticipated consumer spending, but the data also confirmed that corporate profits and investment declined during the quarter. Nevertheless, we will take a cautious stance towards this data and regard them as outdated, given that the global turmoil intensified during the first quarter 2016. We prefer to wait for the first estimate of the first quarter GDP before drawing any safe conclusions about the recent performance of the US economy. Incoming data for the first quarter have been mixed so far, with falls in retail sales suggesting subdued spending, while PMI surveys showed signs of a rebound in the manufacturing sector. Given that the recent FOMC speakers have been quite upbeat about the resilience of the US data despite the global turmoil, we believe that the initial estimate of the first quarter GDP could be a determining factor of market expectations about the next Fed rate hike. As for today, during the European day, markets will remain closed in most European countries in celebration of Easter Monday. Markets will be open in the US, though, from where we get personal income and personal spending for February. Both figures are expected to have slowed to 0.1% month over month from 0.5% previously. The personal income forecast is supported by the slowdown in average hourly earnings for February, while the falls in retail sales, durable goods orders, and consumer confidence prints for the month corroborate a possible slowdown in spending. A slowdown in both figures may reverse some of the dollar's recent gains, at least at the release. We also get the core PCE rate and pending home sales for both for February. The Dallas Fed Manufacturing Index for March is coming out as well. We have no speakers scheduled on today's agenda. As for the rest of the week, on Tuesday, the event that is set to attract the most attention is Fed Chair Yellen's speech at the Economic Club of New York. While the Fed chief struck a cautious tone with regards to the rate path at the press conference that followed the latest FOMC policy meeting, a plethora of Fed members sounded much more optimistic recently. It would be interesting to see if Yellen is now on the same page as her colleagues or if she maintains her cautious stance. If Chair Yellen's comments echo the remarks of recent speakers, this could encourage investors to bring forth their expectations for the next rate hike and support the dollar. On Wednesday, we get the US ADP employment report for March, 2 days ahead of the non-farm payrolls. The ADP figure is expected to show that the private sector gained 194,000 jobs, less than it did the previous month, where the print hit 214,000. A solid ADP report could increase speculation that the NFP print due out on Friday may also come near the 200,000 mark, which indeed is expected to come at 205,000. On Thursday, Eurozone's preliminary headline inflation rate for March is expected to rise slightly, but to remain in the negative territory, while the core figure is expected to accelerate. This suggests that low energy prices continue to be a drag on the headline reading. As a result, investors may focus primarily on the core inflation figure. Finally, on Friday, the main event will be the US employment report for March. The forecast is for non-farm payrolls to increase by 205,000, down from a 242,000 surge in February. The unemployment rate is expected to have remained unchanged at 4.9%, while average hourly earnings are forecast to have rebounded on a monthly basis after February's unexpected fall. Following the recent hawkish comments by several FOMC members, this employment report could be crucial to the Fed's pace of normalization. Another strong NFP figure, combined with a rebound in average hourly earnings, may be enough to shift market expectations for the next Fed fund increase a bit forward. In Japan, the Bank of Japan releases its quarterly Tankan business confidence survey for the first quarter. The forecast is for a tumble in the big manufacturers index and for a slight decline in the big non-manufacturers index. From China, we get the official and Caixin manufacturing PMIs for March, but no forecasts are available yet. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.